What are hybrid funds? In the simplest terms, a hybrid fund is a type of mutual fund that invests in a mix of asset classes. This typically includes stocks, bonds, and sometimes other assets like gold. The idea is to balance the risk and reward by diversifying investments. Think of hybrid funds as a balanced diet for your investments. Instead of putting all your money into one type of asset, hybrid funds spread your money across different assets, providing a blend of growth and income. This helps in managing risk better than investing in a single asset class. Now, let's dive into the various types of hybrid mutual funds available in India. 1. Equity-oriented hybrid funds. These funds allocate a larger portion of their assets to equities, typically around 65% or more, with the rest invested in debt instruments. They are suitable for investors looking for higher returns with a moderate risk appetite. An example of an equity-oriented hybrid fund is the Balanced Advantage Fund. 2. Debt-oriented hybrid funds. As the name suggests, these funds invest a larger portion in debt instruments, usually around 60% or more, with the rest in equities. These funds are ideal for conservative investors seeking regular income with lower risk compared to equity-oriented funds. The monthly income plans, MIPs, are a common type of debt-oriented hybrid fund. 3. Balanced hybrid funds. These funds aim for an equal or nearly equal allocation between equity and debt, usually maintaining a 40 to 60% allocation to each asset class. Balanced hybrid funds strive to provide a balanced risk-return profile suitable for investors with a moderate risk tolerance. 4. Aggressive hybrid funds. These funds have a higher allocation to equities, usually between 65% to 80%, and the rest in debt. They are designed for investors who are willing to take on more risk in exchange for the potential of higher returns. 5. Conservative hybrid funds. These funds allocate a larger portion to debt, typically between 75% to 90%, with the remainder in equities. Conservative hybrid funds are suitable for risk-averse investors who prioritize capital preservation and stable returns over high returns. 6. Multi-Asset Allocation Funds. These funds invest in at least 3 asset classes, such as equities, debt, and gold. The allocation is dynamically managed based on market conditions, aiming to maximize returns while minimizing risk. 7. Dynamic Asset Allocation Funds. These funds do not have a fixed asset allocation. Instead, they dynamically adjust the allocation between equity and debt based on market conditions and fund managers' outlook. They aim to capitalize on market opportunities while managing risks effectively. Now, let's weigh the pros and cons of investing in hybrid funds. Pros. 1. Diversification. Hybrid funds provide diversification by investing in both equity and debt, reducing the overall risk. 2. Balanced risk and return. They aim for a balanced risk-reward ratio, making them suitable for conservative investors. 3. Professional management. These funds are managed by professional fund managers who make investment decisions on behalf of investors. 4. Flexibility. Hybrid funds offer various options to suit different risk appetites and investment goals. Cons. 1. Market risk. The equity portion of hybrid funds is subject to market volatility, which can affect returns. 2. Interest rate risk. The debt portion is sensitive to interest rate changes, which can impact the fund's performance. 3. Expense ratios. Hybrid funds may have higher expense ratios compared to pure equity or debt funds due to active management. 4. Tax implications. Depending on the fund structure, there may be different tax implications for short-term and long-term capital gains. Each type of hybrid fund has its unique features and caters to different investment goals and risk appetites. It's essential to understand your financial objectives and risk tolerance before choosing the right hybrid fund for your portfolio. Choosing the right hybrid fund. When selecting a hybrid fund, consider the following. Investment goals. Are you looking for growth, income, or a balance of both? Risk tolerance. How much risk are you willing to take with your investments? Time horizon. How long do you plan to stay invested? Fund performance. check the historical performance of the fund and compare it with peers. That's all for today's video on hybrid funds and their types in India. We hope you found this information helpful. If you did, please give this video a thumbs up and share it with your friends. Don't forget to leave your questions and comments below, we'd love to hear from you. Subscribe and stay tuned. Thanks for watching, and we'll see you in the next video. Until then, happy investing!